Hey, what's going on YouTube option traders? Welcome to the channel. In today's video, we're going to look at ways we can decide on what strike price to choose when selling a covered call on Robinhood. Do we choose to go for premiums over capital gains, or do we try to get a good mixture of both? We'll try and figure that out today using the charts, some fundamentals, and a Google sheet I use to track my cost basis. If that all sounds like a good thing to you, hit the thumbs up button and let's get into today's video. Okay, let's start with a quick recap of where we're at with the portfolio. As you can see, we're currently at $14,850. We have a put expiring on Friday for store capital, and we still hold the 100 shares of Apple. Overall, we're still down on this portfolio, but we have recovered from our lows of 13,500 to where we are today. And as you can see, we're having a pretty good week. We're up $483 so far. The reason I'm down overall is this Apple position, which I was assigned when I sold a cash secured put at the 128.75 strike price. I'll link a video up top so you can see how I got assigned these shares. But this is the main reason my portfolio is down and why we're going to do today's video regarding selling a covered call, reducing our cost basis so we can make either some capital gains or some bigger premiums depending on where we're at with the share price. So let's have a look at what's been going on with Apple. So Apple announced their iPhone 12 and iPhone 12 Pro this week. It's a great looking phone, their first 5G phone. So no doubt this phone's going to sell really well. You can see on the chart that on the Monday before the announcement, the price of the stock ran all the way up to $125. And then during the event, sold down to about $121 and then has steadily declined for the rest of the week. It did gap down this morning, hitting the 50-day moving average, but has already started to recover. So I think the share price is going to continue to grow over the next week or two and hopefully get back to around that $128 mark. So I can eventually get out of this Apple position with a nice profit. So let's go over to the cost basis sheet that I created and look at what's been going on with the Apple position since I started holding it. So as we've talked about previously, I got into this Apple trade at the 128.75 strike price, kind of trapping me in this position for the last 4 weeks. I originally earned $305 for selling the cash secure put on Apple, which is where I got assigned. And the share price dropped so quickly after I was assigned that I couldn't really make any premium selling a covered call at that point. So I decided to sell a put credit spread and try and generate some premiums and some income to reduce my cost basis. This was a disastrous move on my part. The share price continued to fall, and I ended up having to close this trade out for a loss of $98. It wasn't a max loss, so I did manage to stop a full loss on that trade. But that taught me another valuable lesson of sometimes it's better just to bide your time and wait for the share price to come back to you. So that is what I decided to do, and I started selling covered calls on Apple, even though the share price was so far off my my cost basis. The first one I sold, I only got $8 for. But with the premiums I was paid and the losses I took, I have managed to bring the cost basis of Apple down to $126.45, and I have earned $230 in premium. So even though this trade hasn't gone perfectly, I have learned a lot of lessons along the way, and we're still generating some money, and we've managed to bring the cost basis down. So today we can look at the options chain and decide whether we want to try and sell a covered call at the sort of 127 mark, or do we want to try and get some capital gains and sell at the sort of $128, $130 mark. So what we'll do is we'll look at the options chain. We'll plug in some numbers to this sheet, see how it affects the cost basis, and try and make a decision of what we want to do. Okay, so let's head over to Robinhood and pull up the options chain for Apple. Today is the 15th, so we do have some contracts expiring tomorrow. So if we were to look at the 127 strike price, we can make around $4, which isn't the most exciting amount of money. So let's push out for a week and make sure we set this to sell calls, because we're going to sell a covered call. And let's look back at our cost basis, which we know is around 126.45. So, if we were to select a 126 strike, we can make $96 in premium and drop the cost basis down a touch. So let's have a look at that real quick. So if we plug in $96 there, one contract, you can see that will bring our cost basis down to 125.49. So at the 126 strike price, we'd make around $51 in capital gains selling that price, and our total premiums would have been $326. This brings me to the point of, do we want to try and get out of this trade and sort of make minimum profits, or do we want to look at trying to sell at least our original strike price, or even try to make some more capital gains at the $130 mark and make this $45 today? So let's go back a bit and put in 0.45 and get that one contract, which will generate the $45. This brings our cost basis down to $126 even, and will make our total $275 in premiums overall. I think there is some upside for Apple in the coming weeks. So I think trying to decide now whether we want to get out of this position for minimum profits, or try and get out with some capital gains and the premiums, I think is the better move. So I would make around $125 in capital gains selling at 130, and obviously I would be able to keep all the premiums I've generated, because that would be all profit at that point. So I think that's what I'm going to do. I think I'm going to sell this $130 strike price, bring my cost basis down a touch, see how next week goes, and that way, if Apple does move up to 130 and I do get my shares called away, no problem. I'll start selling cash secured puts on something at a lower strike, or even a different stock we can look at. So let's move back to the options chain and just double check this trade. As you can see, the price is moving up and down. So currently it's at $44. So let's select that call. We continue. I think right now the limit price is between 44 and 45. So I think we'll try and get the $45. The price has been moving up and down, so it should fill at $45 today. I'm pretty confident. We'll review that order real quick. And as you can see, I'm agreeing to sell my 100 shares of Apple at $130 on or before October 23rd. I'm going to submit that. And like I say, hopefully that will get filled very shortly. So let's go back to the main page. And we'll wait to see if that order fills over the next couple of minutes. In the meantime, I have a tracker that I've been keeping track of all the options I've traded since I started selling options back in the beginning of August. So we can plug that one in. Obviously, we haven't closed it yet, but we can choose the strike, which we did, which was 130. We're going to try and get that $45. We'll sell one contract. And as you can see, that now brings my total up to around $502 in premiums in since I started selling options. The Apple trade just got filled and is now popped up on the board over here. So hopefully the price of Apple continues to climb next week, and the week after that we can sell a covered call, make some decent premiums, and possibly get these shares called away at a nice profit. Looking at the daily chart for Apple, you can see the price fell all the way down to 105, found support there, continued up and broke above the 50-day moving average, sort of consolidated around the $112 mark, and then gapped up this week with the news of the iPhone event, and is now holding a good amount above the 50-day moving average. So there's a strong possibility that the share price is going to keep climbing and hopefully break my original strike price, enabling us to make some decent money next week. So I think that will do it for today, guys. We'll come back next week when the cash secure put I sold on Store Capital has expired, freeing up my collateral and enabling us to wheel a different company. I hope you found value in seeing the way I track my cost basis, and that affects the decisions I make on whether I want to get out of this trade at break even and just take the lessons I've learned, or to manage the trade and try and get out with some decent premiums and profits for all this time we've spent. The last thing I want to say to you guys is I really appreciate everyone that's subscribed to the channel so far. I've had some great engagement in the comments, so please keep that up. And if you have any questions, let me know and I'll get back to you. If you haven't currently subscribed, please consider doing so. We're all on this journey to become better traders together, so I would appreciate your support. I hope you've all had a green week. You have a great weekend, and until next time, have a good one.